Okay, well, I'm going to go ahead and get started. Welcome, everyone. Thank you for joining us to hear more about the Alexandria Resilience Fund, the grant process, as well as more about how to assess your financial health in this time of uncertainty. My name is Brandy Yee. I'm the Chief Program Officer for ACT for Alexandria. Please note that we are going to have time for Q&A at the end, so you can use the Q&A function to capture any questions that you have, so please don't hesitate to enter yours there. This session is being recorded, so we'll send a link and post it to our website shortly thereafter. I wanted to share a brief overview of the Alexandria Resilience Fund. As many of you know, soon after the pandemic began, ACT and the city mobilized the ACT Now COVID-19 Response Fund, and that fund awarded nearly $920,000 in grants to more than 80 organizations, including many of you on the call. This new fund, the Alexandria Resilience Fund, is made possible by the City of Alexandria and the CARES Act. It's the next iteration of the ACT Now Fund. Our goal is to award around $2 million in grants focused on the health and sustainability of local nonprofits addressing residents impacted by the pandemic. We are awarding grants up to $50,000, and this is the largest grant that ACT has ever made. Because this is CARES Act funding, nonprofits must spend their grant funds by December 30th, 2020. Well, you can find more information about the grant on ACT's website. We'll drop the link in the chat so that you have it. Just a heads up, the review committee, when they're looking at your applications, they're going to be looking at how your organization has served and is continuing to serve City of Alexandria residents impacted by COVID-19. Your ability to implement your proposed request and spend the funds by December 30th, 2020, and your organization's commitment to racial equity. The first grant deadline is today, October 1st, and if you have any questions, please don't hesitate to reach out. We have a list of all the grant rounds and the deadlines listed on the site. Now I want to jump into our partnership with FMA. FMA helps nonprofits build their fiscal strength by offering advisory services and practical tools to overcome challenges and navigate significant decisions. We're looking forward to learning from them how we can all address our financial health and plan ahead in this time. And we hope you'll take advantage of the one-on-one coaching sessions that they'll be offering. I'm pleased to introduce Maria Veronica Banks, MV for short. She was born, raised, and has returned to Arlington, and she's really excited to be working on this program with us. She and Andrea Mills will be walking us through this webinar. So please welcome MV.
Thanks, Brandy. Like Brandy said, I am MV Banks. I'm a consultant with FMA based in our DC office, but currently working from Arlington, Virginia. So it's nice to be with neighbors. I wanted to start out with a couple webinar controls. I'm sure a lot of you are very familiar with Zoom at this point. We've been on Zoom, it feels like, nonstop since March. But just in case this is new to you, this is a webinar, which is different from a meeting. So you are all off video and should come in muted. If you'd like to change your audio or speaker settings, click on the audio settings in the bottom left-hand corner. We ask that you use the chat feature if you're having any technical issues. Molly can help you with that. And then we're going to have a Q&A box as well. And basically that's going to be for any questions you have about content, about coaching, about the Alexandria Resilience Fund that might come up. We have a Q&A portion where we intend to get to all of your questions that come in through there. But if someone on our team has an answer for you sooner, we'll try to chat it back to you. So we also like to have webinar norms at FMA, just to encourage everyone to kind of come to the space in the same mindset. So we ask that you all participate authentically, respect each other, judge ideas and not people. We ask that you be present and engaged, avoid multitasking, which I know can be super tough on these calls, but it's really the best way to kind of download that content for yourself. And we ask that you all also be patient with technology. I know a lot of us have kids at home doing remote learning, partners that are also on Zoom calls. So if you could just please be patient with us, we'd appreciate it. So we're going to start off today with a poll that Molly's gonna send out for you all in a second. It's important for us to find out who's here with us? Is it a lot of development folks? Is it executives? And that helps us kind of determine, it takes a village to make financial resilience happen. So which villagers are with us today? We'll give you a couple of seconds to fill that out. Got a lot of executives. That's great. We love to see you all on these calls because you are the ones really driving the decisions and leading your team. So thank you for filling that out for us. So our two main objectives today are to understand the current financial health and identify the different resources available to you all, and also help you identify how to leverage and build financial resilience during this time. We realize it's a really difficult time for nonprofits, and just letting you know that there are resources out there and how to best utilize them. And so with that, I will turn it over to Andrea Mills, who's our principal for outsourcing here at FMA, who's going to lead us through the rest of today's content.
Great, thank you, Wendy. Welcome, everyone. Well, I'm excited to see the participation, the different roles within the organizations and the participation that's here this morning with us. And we have a lot to discuss. I will be with you for the next hour, and hopefully we will be able to relay a lot of different information to you. And then, as with everything that FMA does, we also like to make sure that organizations walk away with some tools. So at the end of the presentation, you will be receiving some tools that I will show you today as we go through the presentation. So we are about maybe telling people how to do something to a certain extent, but also saying, and by the way, here's a tool that's out there, because we recognize the fact that we're all busy. We understand there's continual pressures put on us on a day-to-day basis, and we're being pulled in many different directions. So, but I'm really excited to be here because it's great that for yourselves, you have the ability to have access to funding, and you have the ability to get some support that may be able to help you during these troubling times. So I want to start the conversation around, we frame in terms of when we look at organizations, like what makes a financially resilient organization, or in some cases I say, what gives an organization some fiscal muscle to a certain extent. And so I just want to, I actually just want to read the definition of a financially resilient organization pretty quickly, and then we'll go on to our FMA slide on what financial resilience is. But when we think about financially resilient organizations, we think about focusing on the long term. And I know right now in this pandemic and what we're dealing with, long term for us might be 6 months. But when we look at organizations that really have some fiscal strength, they do focus on the long term and say, okay, what do we need to do now? How do we assess where we are? And what do we need to do for the long-term viability of our organizations? And it might be short-term fixes that we put into place, but we know they're going to have a longer-term impact. So I want you to be thinking about that in terms of when we look at your financial picture today, because I'm going to spend a lot of time talking about where are you right now, which is very important when we go out and we talk about what needs we have. And so when we look at financially resilient organizations, they have a really great understanding of their financial picture, and they have the ability to convey their story to funders at the governance level, internally with their team. As we know, right now we're probably managing a lot of panic internally. And so again, when we look at being able to convey our story and being truthful about our story, it's very important. So that when we look at financially resilient organizations, we think about that. And so let's go on to the next slide and we'll break it down. And so at FMA, we, in a lot of cases, like to make things into a picture, because as you know, we're dealing with numbers, and in a lot of cases, people can grasp information better when they look at something pictorially. And so we sat down at the table, I will say several years ago, and said, if we were to define the organizations that we work with, how would we define financial resilience? And so main things in terms of when we look at an organization, and we'll talk about the outer band. If we look at the outer band and we look at an effective leadership team, a sustainable business model, and capital for change and security, an effective leadership team is key in any situation. And so when we look at organizations that are high performing, they've set up the structure for people to become leaders within their organization and be there to help run the organization and manage it for the long term. And so when we look at building teams, it's where not one person wears all the responsibility of the organization. It's where we have a team approach to how we take on new challenges, how we look at how we're functioning on a year-by-year basis, and how we function strategically. So we see organizations that they've built a good leadership team infrastructure. We also look at their sustainability of their business model. And as we know, business models can change. You may have had a business model that was a great business model 10 years ago, and when we look at the way that things are today, this might not make sense for the current environment. And so again, they're continually assessing, does this business model make sense? And when we look at business models, we look at what is funding your organization? What are the types of funding sources that are out there to help support your long-term viability? And do those funding sources make sense in the current environment or for long-term viability? And then we also look at capital for change and security. I'm going to talk about liquidity today in a couple more slides. And we do focus on, and I'll use the term reserves, and we do focus on thinking about how liquid is the organization to be able to make adjustments when is needed, and where do we have capital for long-term security. So we will focus on that, and we're going to give you a couple tools to also be able to talk about that picture. And then internally, when we look at organizations that are high performing, they've got good infrastructures for planning, and planning could be a 3-month, 6-month plan as we're dealing with things right now. It could be long-term planning, the 3 to 5 year picture. It could be scenario planning. We have a lot of organizations that we're working with them on scenario plans. And so good planning and internal communications around those plans. And then operationally, do we have the right tools in place, the right people in the right spot, and the right processes there? And we're also going to talk about a couple tools in thinking about technology in today's environment, and then performance management. How do we gauge our performance and where we are and what we want to accomplish? And then in the core of our organization, and we want to focus on and talk about equity and inclusion. And so when we look at our values and how our values shape how we work as an organization, and again, how we need to make sure our values are aligned with where we want to be as an organization, how our values come out in a time of crisis. And when we look at equity and inclusion, this may mean needing to make decisions that might make our organization more vulnerable during this pandemic of what we're going through, but they're the right decisions for our organizations. So again, when we focus on our core, our inner functions, again, making sure that any decisions that we do need to make, and we know that they're quickly, it again is something in terms of we have to be very much in tune with making sure equity and inclusion are at the forefront. And so, and just looking at organizations that they're continually mission focused, they're continuous improvement, and they're data driven. So let's go into the presentation. I want to set the framework and talk about what we're going to talk about today. So first off, when we look at financial planning, the first thing is we have to understand where we are right now, and right now at this minute. And so it's October 1st. If you are December 31st year end, you've been operating for 9 months now. And if we are a June 30th year end, we're pretty much done with the first quarter of operations. And so we need to know, where are we right now? what do our net assets look like? We're going to talk about those, and what is our liquidity in the organization. So very important to understand our current financial picture. Then from that point, once we know our current financial picture, we're going to figure out what are the implications and what are the scenarios that are out there. And so we're going to look at revenue and expense drivers and look at those, look at the implications of what's happening on the revenue side of the equation, on the expense side of the equation, and what are the various scenarios that may come into play with our organizations. And then when we finalize our conversation today, we're going to talk about cash flow and options around cash flow. Cash flow in terms of what does it look like over the next, I'll say 6 months. I've been wearing the 6-month hat. And then what are options that are out there? Are there financing options? Are there access to other sources of funding? And so again, taking a look at what are our next steps when we look at good financial planning. So let's go on and take another poll, and this will help me to gauge where you are as an organization. And what I want to say about all of the polls, they are anonymous, so I don't know who's answering yes, no, or maybe. So I just want you to not feel as if you're divulging any information publicly. Everything that you are participating in at the poll level is anonymous. So in terms of your current financial picture, where is the state of your current financial statement? And this doesn't necessarily have to mean audited statements. It would mean maybe your internal monthly financial package. Just wondering in terms of understanding the financial picture of where you are right now and how current is your information. Great. Well, that's great to see that a lot of you are very current in terms of last month and 1 to 3 months. So again, as mentioned, it's really important right now to have a good grounding, and this is exactly where we are at this point in time, and then that sets the stage for options that are available for the future. And so again, for those of you within the last 3 months, that's great information in terms of making sure those statements are up to date, and it's good information for us to be able to make timely decisions. And so again, thank you for responding. And for those of you that may be past the 3-month mark, it's a time to start the conversation around, well, maybe we need to get these up to date, and what resources might I need to help me get up to date? And so just to be thinking about, is it I could hire somebody to come in part-time and maybe do some catch-up for me? Is there a possibility of, I might be able to allocate someone internally to help me get the financials to a more current state? And then for those of you who may be waiting for the audit, you can contact your audit firm and ask them for any adjusting journal entries right now, even if they haven't given you the financials, and you can get them into your system. So at least you're making those adjustments. And for those of you who don't know, that's totally fine, totally fine. So let's go on and talk about our financials. And one thing that I forgot to mention at the beginning, if you see me freezing, it's bandwidth issues. So I'm on my phone, so you'll still be able to hear me, but if all of a sudden my picture freezes, it's just based on bandwidth, and so I'm still here though. So when we look at understanding our financial health, we look at our financials, of course, and we have our balance sheet and we have our budget to actual reports. And so I'm going to start with the balance sheet, which in nonprofit terms is your statement of financial position. The balance sheet for me is actually one of those statements that gets, I'll say, the least amount of attention sometimes, but it's extremely important. Because when I look at the balance sheet of an organization, it tells me a lot about the organization, where they are right now. And it also gives me a picture of what has happened historically, believe it or not. And so when we look at the balance sheet, it is a point in time. And when I say if we were to turn off the lights tomorrow and you handed me your balance sheet for today, I would know exactly where you are at this point in time. So when we look at the balance sheet, it's going to show me your cumulative result of financial activity, and we're going to talk about your net assets. And your net assets are, in for-profit terms, the equity in your organization. But when we look at your balance sheet, your statement of financial position, I'm going to be able to look at those net assets and see what was the cumulative result of my financial activity since date of inception and since when we started, and what do I look like right now. Now, something that I will bring up in a couple slides, one of the tricky nuances to nonprofit net assets and equity compared to for-profit organizations is that in the nonprofit world, your net assets might not be yours. And so when we talk about net assets with donor restrictions and net assets without donor restrictions, so that's a key thing that we need to look at when we do look at the balance sheet and we look at that net asset section. So, but your balance sheet's going to show me a lot of information about your cumulative results. I'm going to be able to take a look at that. We're going to dissect the net assets. It also shows me some financial health indicators. I can gauge your liquidity by looking at your balance sheet. I can see how much debt you have taken on, and then again, what accumulated reserves you have there to work with in terms of being able to have that, we'll call it financial muscle to weather the ups and downs. And then when we look at your balance sheet too, it shows me the financial flexibility. So when we talk about that financial muscle, it means that, okay, so if I have reserves, when should I tap into them? When is it important for me to actually say, this might be the time? And so that financial flexibility, I'll be able to take a look at and then have those conversations at the governance level or internally. And then most importantly, you need to reconcile to bank statements, any supporting external documentation it must be reconciled to. And then, as mentioned, it includes restrictions. So there may be things on your balance sheet that are restricted, and we have to take that into consideration when we look at your statement of financial position. Are all of these assets and these net assets ours, or are portions of those assets and net assets for someone else? And so again, that's the tricky nuance of being a not-for-profit organization. And then we're going to talk, when we look at our budget to actual reports, and we'll call it your P&L for short, your statement of activities in nonprofit terms, that's your financial activity for the current year. So that budget versus actual report starts at 1/1 of blank time of the year, and it goes through the year. So if you're a June 30th year end, right now we're going to be looking at budget to actual reports for the first quarter. If you are December 31st year end, you have 9 months of activity we're looking at. And so it is the activity for this current fiscal year, which tells me a lot about what's been going on with the organization. It also shows me revenue by funding stream, along with the unrestricted portion. So again, and I have to carve out my revenue between restricted and unrestricted. It's very important. In the nonprofit world, we can commingle those funds in a bank account, but we need to, when we look at our profit and loss statements, we need to be aware of what revenue that's sitting there is actually revenue we can use and we have access to, and what revenue we may not have access to or we need to use on a particular purpose. And then our budget to actual report, our statement of activities, our profit and loss statement will tell me the rate of spend by expense type. I can see how much you are spending on a monthly basis to gauge, give or take a couple dollars. And so I can take a look at your organization, and I use simple math because I'm an accountant. So if your current expenses, if your yearly expenses are $1.2 million for the year, and I want to say, I wonder how much this organization spends on a monthly basis, I can just divide by 12, and I have $100,000 a month, give or take a couple $1,000s here or there. There might be some months that are higher or lower than other months. But again, I have a gauge that says on a month-by-month basis, when we start the month, we know it's going to cost us $100,000 to run the organization. So Profit and loss gives me a lot of information. The balance sheet gives me a lot of information too. Let's move on to the next slide. And so when we look at our balance sheet, we look at it in terms of, remember, it's a point in time. And I'll look at it and I'll say, okay, what do we own as an organization? And those are our assets. What do we own? So, and now again, I want you to wear restricted versus unrestricted, right? Because we might have some assets that are there that may not be ours, but when we look at our assets, we have to look at what do we own? And so that's cash. And again, carving out any restricted cash that might be there, but there's cash. There are receivables and that's what other people owe us. We might have some investments, and then we might have fixed assets. So these are all the things that we own as an organization. So we take those assets and we subtract out liabilities, and liabilities are what we owe back out. So again, liabilities are our vendor invoices, accounts payable. We might have access to a line of credit that we had to dip into. We might have some deferred revenue that's associated with our liabilities that we might have to pay back. And then we might have some debt that's short or long-term, depending on what type of debt it is. And taking our assets less our liabilities, it gives us our net assets, and that's our net worth. And now, bearing in mind, though, our net worth is net worth with donor restrictions and without. And so when we look at financial flexibility, financial muscle, we're also looking at, when we look at those net assets, which net assets are without donor restrictions, because those are the net assets that we can dip into, do what we need to, tap into when we need to, do what we want with them, whereas with donor restrictions, we have to go back and have a conversation with the donor. So again, I keep driving that point home, but it's a very important point. So let's go on to our current financial position. So we're getting a good grounding in where we are right now. And so, again, when we look at our current assets, we look at cash. Cash, how much cash do we have in the bank? If I was to stop right now, and I'm going to say, pretend September 30th is our, it's October 1st today, and your financials are up to date as of September 30th, and you're looking at them right now. How much cash do I have in the bank? And then I want you to say, okay, there might be $100,000 there, but is all that $100,000 mine? Is it the organization's, or are there some restrictions to that $100,000 and there's a particular purpose attached to them? So you want to make sure you carve out that cash between what's unrestricted and what is restricted. Next, we're going to let's look at all the money that people owe us. It's those receivables. And receivables right here, we're listing out accounts receivable. It could be grants receivable too. You might have some funder receivables that are out there and you're waiting to collect them. So most importantly, I want to look at a receivables aging schedule. I want to take a look at that aging schedule and say, what is the timing? How old are these? When do I think they will be collected? Is there a way that I might be able to get collection in sooner rather than later? Start to think about, and so you want to be on top of how old your receivables are. We've been working with organizations to say anything over 60 days you want to be on top of. You want to be picking up the phone. You want to be in conversation with whoever may owe you money to say, we want to just find out, is everything okay? Are there any problems in terms of when you think you might be paying us? When do you expect us to receive payment? You really want to be on top of any receivables that are outstanding that are out there right now. And then when we look at liabilities, that's the reverse. That's what we owe out to other people, our vendors. We might have contracts where we owe funds. And so again, a lot of what we say, and this is, during times of any times, not during pandemics, economic calamities, or whatever, everything that we do is about good communication and good relationships. And so when we have really good conversations with our vendors too, that gives us the ability to maybe go back to them and have a solid conversation around, it might need a couple more days, or could I negotiate this and pay it over a couple months of a payment stream? And so again, looking at our vendors and our contracts and assessing how old are our payables, when are they due, are there vendors I can reach out to, and then also with some contracts. We had several clients that went back and reviewed their contracts that were going to be for next year pre-pandemic, and they went back and negotiated them because they said, we thought we were going to be doing this, this, and this, but because of what's happened, is there a way that we can reduce the scope of services here? Or we're going to delay when this contract starts. It's not going to start until the first of the year now. And so again, having those conversations and those relationships with your vendors. And then I want to bring up accrued PTO, paid time off. This is one of those computations that happens when the auditor shows up. So the auditor comes knocking on the door, and we have to put together a schedule that says, how much would we owe our employees if we were to stop operations at year end? Say, okay, our June 30th year end, we're shutting our doors, and how much would we owe out in accrued paid time off and vacation? I recommend that you put the schedule together now and not wait for when the audit firm shows up at the end of the year. Because of the fact we want to take a look at what those numbers are so that we're on top of what that potential liability is. And so it shouldn't be that complicated to put together. And I would want to know, okay, if I was going to make some critical decisions a month from now, 2 months from now, what am I looking at in terms of accrued PTO and paid time off? And so again, I'm looking at those balances. And then you might have some other liabilities that you need to take a look at and really look at their deadlines, when they're due, and how you're going to make sure that you're going to be able to pay those. Let's go on and talk about our next slide. So we talked about our assets and liabilities. Now let's talk about our net assets. So again, something that makes us unique in the nonprofit world is that we're dealing with unrestricted and restricted. And so new terminology is without donor restrictions and with donor restrictions. So when we look at our unrestricted fund, that's where we may have board designated funds. Board designated funds are internally restricted. And so that's where we are, looking at, okay, what was the original purpose and intent for these funds? Can we redirect these funds at this point in time? And remember, they're internally restricted. So at the governance level, we're going to approach the board and we're going to say, I know we had set aside these funds for capital improvements next year. Could I dip into some of these funds because I need to do blank today? And so having those conversations, or these funds were for program expansion. Is it possible that we could utilize some of the funds for what we're dealing with right now? And then we're going to talk about liquidity of those funds. We look at LUNA for short, liquid unrestricted net assets. That's where we're going to look at how liquid those net assets are and how many months of operation we'll cover. And I'm going to go through the computation with you in a couple slides to talk about liquidity and what those net assets look like. And then when we look at our net assets with donor restrictions, we may have temporarily restricted net assets. That means there's a particular requirement attached to those net assets, or there's a time restriction on those. And so these are conversations, again, when we talked about really good relationships, and this is definitely those times when we need to, really fall back on our relationships with our funders, with our donors, internally and externally. And so again, having the conversation, can we meet the donor requirements and going back and having a conversation, or could the donor consider releasing the funds earlier rather than when they were originally anticipating release? And then we want to look at our endowments and our market value, if we do have any. Is there a way to tap into any prior gains that we may have made? Maybe we do have some funds that have some gains there that we could touch, and then, making sure we're on top of the market value of those endowments. Let's go on to the next slide. And I am deferring to the team if there are any really important questions that came in. I see some Q&A in chat there that if you want me to pause to take a question, I can slip something in, I promise. So when we look at liquidity and cash on hand, and we are all about liquidity. How liquid is the organization? Liquidity gives you that financial flexibility. And so when we look at liquidity, again, we're going to look at what money do you have in the bank, your cash and cash equivalents. Now I want you to hone in on restricted versus unrestricted too. And then I'm going to look at your average spend per month. Remember my example, I'm a $1.2 million organization for the year, spend about $100,000 a month. My average monthly expenses are $100,000. And then I say, okay, how many months of cash on hand do I have? If I was to stop operations today, this moment, I want to be able to look at that number and go, I'm going to have about 3 months sitting there. And this is a really important conversation at the governance level too. When we go back to the board and the finance committee or finance/audit committee and say, listen, this is what's going on with our organization, and here's what we're thinking about doing, because remember, we always want to offer solutions. And so here's what we think we could do with this situation, and what are your guiding suggestions too. So let's look at the computation. Let's go on to the next slide and do our computation. So we're going to start with our assets. And again, we're looking at cash. So in this organization, I have cash of $1.1 million. For simplicity purposes, we'll assume this is all unrestricted money. This is all money that is without donor restrictions. And so I have $1.1 million in the bank. It's September 30th. I want to look at, okay, what's my monthly expense? What's my average monthly expense? So I'm going to take my year-to-date expenses. So I have $2.5 million in expenses. I'm going to divide by 12, and I come up with about $200,000 a month, or $210,000 a month. So if I take my cash and I divide it by my average monthly expense, I'm going to be able to have a conversation at the board level. I have about 5 months of cash in the bank. This is one of those questions I like to ask executive directors of what wakes you up at 3 in the morning, and usually payroll is one of the answers, but how much cash we have in the bank. And so this is one of those, we call them key performance indicators, one of these computations. We recommend doing this computation all the time, not just during economic calamities or pandemics or whatever we may be going through at the time. We recommend this is something you should be looking at and tracking and looking to see maybe there are different points during the year where my months of cash on hand are very high during the pre-summer months, but then when we start summer camp, at the end of the summer camp session, it's very low. You want to be, there's a seasonality to it too. And maybe internally you're going to set an internal goal to say we want on average at least 90 days of cash on hand. And I know I always get the question, how many months should we have on hand? That's a big question because we have to look at your business model and what makes sense for you as an organization. But again, setting internal goals too to say we want at least this amount of cash in the bank at any point in time. And so this computation is something we highly recommend doing any time during the year. You could do it on a quarterly basis and tracking cash on hand quarterly. You might do it monthly, but it is a really good computation and a good conversation around where do you stand. So let's go on and look at the next slide. So when we look at calculating cash on hand, then we say, okay, based on that, we've got cash in the bank. How much cash? How many months of cash do I have? Then I'm going to take a step back and I'm going to go, well, how liquid am I as an organization? And so when we look at liquidity, we're also going to gauge how liquid our unrestricted net assets are. And so when we look at liquidity, we look at our unrestricted net asset base Now, in those unrestricted net assets, we need to subtract out those illiquid net assets. So I'm going to take you through the computation again. Assets minus liabilities equal net assets. In those net assets, we have cash, we have receivables, we might have investments, and we have fixed assets. And we might have prepaid expenses there too. In our minds, fixed assets are not very liquid, and it takes a while to sell them. So we gauge our assets by order of liquidity. And so when we go to calculate our liquid unrestricted net assets, because those assets are in this number, our unrestricted number, we have to pull out the illiquid net assets. And so those illiquid ones are ones that they're not easily convertible to cash. And fixed assets is the big one, if we think about it. So we take our unrestricted base, we subtract out any fixed assets, and that gives us our liquid unrestricted net asset base. So you might have unrestricted net assets of $1 million, and you might have property, plant, and equipment, a building of $900,000. So you might say, well, I have $1 million in net assets, but if I subtract out the building, now I really only have $100,000. So again, we want to look at how liquid those net assets are to be able to determine how many months of liquidity do we have. So let's go on to the next slide and look at the computation. So we're going to take those unrestricted net assets that are without any illiquid net assets in them, and we're going to divide them by our average monthly expenses. So in my simplistic organization, it was $100,000 a month. And then I'm going to see how many months of operating reserves I've accumulated. Now remember, our net assets are our accumulation of operating results since when we started, since inception. So again, let's look to see how much liquidity we have accumulated over the course of our years. And so let's go on, and we're going to go do the computation in the next slide. So when I look at my liquid unrestricted net assets, LUNA for short, the first thing I'm going to do is I'm going to go to my net assets. And so I'm going to look at my total unrestricted net assets that are sitting there, those net assets without donor restrictions. So in my example here, I have $620,000 in unrestricted net assets. So I'm going to take that number, and I'm going to subtract out anything I do not have access to as an organization. So in this case, they do have board designated funds that are there in that number. And those board designated funds might be for something that we cannot get repurposed, whatever it may be. But I'm going to take those net, or there's a discussion that I could have at a future point in time. So for the purposes of this computation, I'm going to subtract them out. So we're going to take the 620 and we're going to subtract out the 250. And then I'm also going to look at my net assets. So up above, I have net assets, fixed assets of $47,000. So I'm going to take those and I'm going to subtract them. That's going to give me a net basis of $322,000. And then again, I'm going to take those average monthly expenses. In this case, they're $208,000. And I'm going to divide, and I'm going to look, and I'm going to say, I have about 1.5 months of liquid unrestricted net assets. And this also is one of those I call KPI, key performance indicator, that you should be computing all the time in terms of what does it look like. Now for you, based on your size, it could be quarterly, it could be monthly, even at least at mid-year, and take a look at it and see what's happening. Look at the trends. We're all about looking at trends. Look at, okay, where were we 3 years from now? 3 years ago, where were we last year? Where are we right now? What does it look like? Is this trend upward? Is it staying the same? Is it decreasing? So again, understanding your financial picture and being able to tell your story. And in a lot of cases, we say telling your story at the governance level, starting there, but also being able to have a really good conversation with funders to say, based on what's going on with the pandemic, we just want to let you know where we are and what our plans are. And so we have up-to-date financials. This is our liquidity. This is what we look like. This is what we started the year with. You know, I wouldn't have a problem starting there pre-pandemic. This is where we are now, and here's what we're thinking about. And is there a way that you can help us? And a funder will be much more in tune with somebody that's on top of their financial picture than someone who's just asking for money just to ask for money for the sake of it. And so again, calculating Luna and calculating your months of cash on hand are really important. So let's go on to the next slide and take a poll. So for those of you, and you may say, we've never calculated Luna before, I totally understand. How might your Luna balance change in the coming months? You could also make an assumption and say, Andrea, this is what we think. Great. Great. So in terms of those who participated, there's going to be, you know, when we look at decrease versus increasing, we have some that do know they're going to have a significant increase. Some are going to have, you know, a decrease, but there is a group of you that are, you're staying the same or there's some increase. So that's great to see in terms of, you know, not every organization is going one way or going in a downward spiral. We do have some clients that are going in the reverse because of the fact of the need that they're focused on. And so, but what's most important here, not whether or not it's increasing or decreasing, it's that you know what it is, and then you can have a conversation around it. So so again, if you don't know, that's totally fine. And when you go back to your organizations, we're going to hand you some tools to be able to work through these computations. Really key to go back and take a look at where are we, and have those conversations at the leadership team level, and make sure they're aware of it, and also at the governance at the board level too. So thank you all for participating. I really appreciate it, and it helps me in terms of setting the tone for the conversation. So let's go on and look at the tool that that we are going to make sure that you have after we're done the presentation. So one of the great things about our team at FMA is we are about, okay, I can pontificate and tell you this, and this, but if we don't hand you some tools, and we're going to show you some more resources at the end, you have to go and invent it, and we don't want you to have to do that. So you're going to have a liquidity calculator that'll help you simplistically to set up what are my months of cash on hand and what are my months of Luna. And there's no reason why this calculator can't be updated, you know, the current numbers on a monthly or quarterly basis. So it'll be your tool to take away, and I hope that you find it very useful in working internally in your organizations. So thank you all for participating. Let's go on to the next slide, and we're going to talk about resources and financing. So as I mentioned, we know where we are now. That's really important. I need to know where I am to have a conversation. And so, however it is that wherever you are and where you need to get to, you know you're going to need to go there after you're done with us today. So again, so what are the implications of knowing what I look like? What can I do? What are my solutions? Well, let's take a look and think about resources versus financing. Your resources are what you already have. So your net assets, those unrestricted, those accumulated resources, you've already got those. So now how can we use them to support us right now? How can we tap into them and what does that mean, in terms of our financial picture. And so again, those are ours, and how are we going to strategically tap into them? And then when we look at revenue, that's also something that's ours. We might have new funding sources that are coming in, or funding sources that we already had. It is time to be able to have conversations with our funders to say, can we repurpose some things? This is where we were planning to spend money back in January. We are now in September. It's different, and we need to have those conversations. And again, those revenue resources are also yours. There's no requirement to pay them back unless you violate some donor requirement, and you have to give the money back. When we look at financing, financing is also something that's available to us, and we'll talk about different types that are out there. Now, when we look at financing, the issue with financing is we have to give it back. So we go out, we borrow, we have to give it back. And what we want to say with financing is that financing should not be used to cover deficits. Financing is used to cover timing issues, where I might have expenses that are going to exceed revenue over the next couple of months, but I know there's a funder payment coming in 3 months down the pike that's going to cover the difference. So again, we need to make sure that we are utilizing finance to cover timing differences. And when we talk about cash flow, we'll be able to look at how you'll see timing differences as opposed to utilizing finance to cover deficits. That's not what we do. And then, as we know with any type of financing, it comes with a price. But there are low interest options that are out there, and we'll talk about a couple in a couple slides. So it's not where every single financing option is at a really high interest rate. We want to make sure that you are thinking about other financing options that are out there that may not come with a big interest rate attached to them. So let's move on to the next slide. And talk about what are the various types of revenue sources that are out there. And so when we look at the various types, every organization is different to a certain extent. And so we look at your various revenue types. And are there ways in which we have some options to create some financial flexibility based on those revenue types? These revenue types also drive your business model. So we look at contributed revenue. You may have individuals that are supporting you. You might have foundations and corporations. You might be heavily government funded. You might have relied on special events, or you've figured out a new way of tweaking your special events for development dollars, or you get in-kind support. And so when we look at contributed revenue, it's getting creative on how do we keep these revenue sources alive during this time of pandemic. We've been seeing organizations that are dealing with individual donors coming up with creative ways to stay in touch with their donor pools to make sure they still have donor funds coming in the door to support the organization during shutdowns. Some of the museums that we work with had to close their doors. How did they still engage their donors to continue with memberships and subscriptions and participating in exhibits and events? Foundation and corporate grants, as always, we always want to have great relationships with our funding sources and be able to have real truthful conversations about where we are. Governmental dollars too, looking at where is the government reallocating funds. My clients that are dealing with anything related to food, there's so much there that they have to handle, and a lot of government dollars are flowing, whereas I have other clients on other sides of the equation where the government dollars are starting to decrease. So again, looking at how the government's shifting their attention and what they're focusing on. And then again with special events and in-kind donations. My food pantry clients are constantly looking for ways in which those in-kind donations are still being utilized and support from the community and keeping volunteers safe. We're dealing with safety issues too, as we all know. Earned revenue models, other income. Can we tweak our program service fees to be unique, to be different? I have some counseling clients. They have actually been able to increase program service fees because of the fact that they can work on virtual platforms now, and they've been able to expand their services, and also hire counselors from outside of their locality because of the fact that they can now expand their reach. And then if we have access to any endowments or investments or any other types of revenue streams that might be there. So let's go on to the next slide. So again, and then as we know, there have been emergency relief funds that are out there. We're all here together to talk about some, ways in which we're going to approach these new dollars that are out there. So looking at ways in which we are aware of the funding sources that are out there. We're engaging our community. We are staying on top of our relationships with our funders. And then, how can we tweak how we deliver our earned revenue model? So let's go on to the next slide and talk about financing. So again, when we talk about financing, it's there to cover delays in cash receipts. It's not intended to cover any operating deficits. And then there are sources of funding that are out there, existing lines of credit. There are SBA loans that came out that we're talking about CARES money today. We did see bridge loans coming out in the philanthropic world, and then low interest loans from CDFIs. CDFIs are community development financial institutions. When this pandemic first hit, there's a large CDFI that we're aware of. They broadcasted out to their member community. We have low interest loans, and some of those loans can be pretty low. Some governmental loans, SBA loans, can be as low as 2%. So again, there is low cost financing that is out there, and for you to for you to reach out to it. Again, making sure you have a good, strong handle on your financial picture and what that means if you do tap into financing. So when we look at financing, let's just talk about cash flow and go on to the next slide, because if we are thinking about approaching for, how do we get financing in the door? Are there any delays between when revenue and expenses are hitting our books? And so again, we need to be putting together cash flow projections. Depending on your need, could be weekly, could be monthly, could be quarterly. I would at least say you're doing this monthly, and you might just be doing it for the next 6 months. That's totally fine. It's perfectly fine. At first, when the pandemic hit, I was only wearing a 90-day hat. Now I'm up to 6 months. So again, most importantly is you're looking at the ebb and flow when money's coming in and when it's going back out. And so that's why having good relationships is really important, to be able to negotiate payment terms or delaying anything that's non-essential, making sure that you're getting funds in the door that are owed to you, and then approaching your funders and explaining why you need an acceleration on the grant. It's, now is the time to have those conversations. And so as we talk about cash flow, of course, we want to make sure you have a tool. So let's go on to the next slide, and we'll show you a tool that's out there on strongnonprofits.org. Highly recommend this website. Please visit it frequently. We're going to show you a couple slides that, ahead of us that you'll get to see another pictorial of it. But we are going to send you out this tool. There's an online tutorial on how to put it together. This is a cash flow projection template. So if you do not currently have one, here is one for you. And it's pretty simple to put together. And as mentioned, we don't want you to have to recreate something that may already be created. So you will be getting this tool at the end of our presentation. And then one last slide, I want to finalize my time and talk about technology. And so one of the things that we have been seeing a big uptick on, and technology was always key pre-pandemic, but now, and we were always having conversations with our clients around paperless, creating efficiencies, being able to work from anywhere, access to data from anywhere. There are technological options that are out there that are all at palatable price points. So if there was a time right now in terms of how do we start to operate more efficiently, And funding sources are there supporting it too. So I don't want you to think, oh, well, if I approach the funder and I tell them I need to go on automated bill pay, they're not going to talk to me. Right now, funders have a really good understanding of how important technology is today. We wouldn't be delivering this webinar right now if it wasn't for technology. So your banks are offering technology at low price points or for free. There's employee expense management software that's out there that's very easy to implement, talks to QuickBooks. There's automated bill pay and check writing softwares that are out there where you're no longer cutting checks. You do not have your check stock out there in the universe where people can have access to your bank account and routing numbers. And that also at palatable price points that also talk to QuickBooks. There's time and attendance and payroll that can be automated, and cloud-based accounting systems, of course, very important in terms of us being able to have access to our data 24/7 and look at where we are. So I'm going to finalize our conversation today with some resources, and then I'm going to turn it over to MB. So some resources. I cannot recommend going to our website enough at this point in time. We have a team that is behind the PPP, the Paycheck Protection Program. This is all free information, free support. Please tap into our PPP toolbox. If you go to the FMA website and take a look at all the work we've done behind providing support to organizations with the Paycheck Protection Program, and talk about, and you'll get to see our racial equity initiative, which is very important to us in terms of how we're supporting organizations that need our help right now during this time. And so again, please visit this, and it's free support, and it's there. And on our next slide, let's talk about strong nonprofits. Another free tool, another website that was there. This website was built in support of the Wallace Foundation, which is Reader's Digest money. There's it's called strongnonprofits.org. It just got revamped. We will be having informational seminars on walking you through the new website, the revamp of it, but there's a lot of tools that were there from the prior website and some more additional tools to help you with your organizations. All free, all downloadable, and a really great resource for organizations to make sure they're very aware. And it's not just for the finance team, this website, it's for all members of your organization, from development to programs to the board to the executive leadership team. And then under those resources, you'll see our next upcoming webinar on the next slide for Strong Nonprofits is on November 10th. And so again, I used to say to my clients, it's, a lunch and learn, go to the conference room, order some lunch, have everyone sit down, and just take a look. It's a pretty quick webinar to go through. I think it's like 40 or 50 minutes long, and it will give you a flavor for what that website has to offer. So I want to turn it over to MV, and then I'll be here, and also I'll be here to answer any questions. So MV, I'm going to hand it over to you. Thank you. Thank you for supporting me with the slides. Really appreciate it.
Oh, yeah. Happy to do it. Thanks so much for leading us through that. So I am here to walk you through some examples of things that Andrea covered that are great ways to use this Alexandria Resilience Fund funding opportunities. So to recap what Brandy had mentioned at the top of this webinar, this fund will support the health and sustainability of local nonprofit organizations that are addressing ongoing and emerging human service needs of Alexandria City residents impacted by the COVID-19 pandemic. So some examples of things that these grant funds could be used for could be replacing the use of unrestricted funding with a grant from the Alexandria Resilience Fund. You could move up the timing of investments that you had already planned on making, but maybe now you can make them in the next couple of months, such as consultants and infrastructure investments. You could use it to pay staff salaries and benefits. Something that we were talking about a lot earlier in the year with nonprofits was like, do we have the bandwidth to keep everybody on board right now? And so this could be that to get you over the next couple of months to meet salaries and benefits for your team. Like Andrea just mentioned, investing in technology, particularly if your staff, admin, and programming have moved to a virtual environment. And I feel like a lot of us have. I know some people don't have that luxury, but for where you can, it's a great use of these funds. And it's also a great opportunity to invest in fundraising and revenue generation, to go look and see what those other funding opportunities are right now, and really bulking up your development folks. So another great thing that is currently being offered through Act for Alexandria is coaching from FMA. So we are offering one 50-minute session to organizations who express interest. We ask that you complete a SurveyMonkey form, which Molly will put in the chat right now, and also will be sending out in the follow-up email. So if you need time to think it over, review it, you can find it on the follow-up email as well. But if you are interested, we ask that you fill out the form, and then what that will do is let us know who's interested and what you're interested in, and we will follow up with you and put you in touch with an assigned coach from our team. We'll find somebody who is the best match for what you're looking for. This coaching can be used for a variety of things, including best practices in financial management for decision making, planning for the spend down of this grant and the use of the funds, and also just advisory on longer term financial sustainability strategies. As you all know, the coaching or the grant period has all your funds need to be spent by December 30th. So we ask that all coaching is completed no later than December 11th. And from there, we'll move into Q&A. So if you have any questions, I saw a few come in. But if you have any questions about the coaching, about the grant fund, about the content we've reviewed today, please put it in the chat and we will answer it as best we can. Actually,
so MD,
yeah, go ahead.
Definitely I'd love to answer Deborah's question. So
yeah, sure. So for those who maybe do not have multiple screens or for some reason cannot see Deborah's, Deborah asks that she'd love to know the best way to show restricted funds in an agency budget.
And that's a great question, Deborah. And so when we think about it, we have unrestricted money and we have restricted money that comes in the door. And so when we're putting together our budget for next year, if we did end the year with restricted dollars that are tied to a purpose, we do have to include those in our budget with the expenses. So, so I would be showing that money, and there would be a line, revenue to be released from restrictions. So you're going to have what you think you're going to get in foundation support, what you might be getting in individual support, maybe you have some earned revenue. And then at the bottom of all those revenue streams, you're going to have revenue to be released from restriction from prior year. You could say something like that. And let's just say it was for $50,000 and it was to support a program or something. You're going to have that $50,000 in revenue, but you're also going to have the $50,000 in expenses there. So you're going to be showing the funder, yes, I have this money here that I need to spend, but here are the expenses that are attributable to it. And then question about, can board members participate in coaching in addition to staff? That's a great question.
I can take that one if you'd like. So basically, you have one 50-minute session. You can send whomever you'd like. I think it's great to have board members in these calls to help them kind of think bigger picture. So yeah, if you would like your board members to come, please invite them to the coaching call as well. One of the questions that we actually ask in the intake form is who do you anticipate participating from your organization? So yeah, please invite your board members.
Be interesting in the chat. I was just wondering, and you could just say yes or no, of the organizations that are on this, how many of you did apply for PPP? You can chat yes or no. And I'll say yes, and we received funding.
I know that not all attendees can see all of these answers, but we've got quite a few yeses and we've received funding, which is great to see.
And so I just want to make you aware that on that website, PPP, in terms of where I was leading on the FMA, there's also tools that are there for the forgiveness computation. And so I know we're all in forgiveness mode now. And so please take advantage, all free, free support. And we're lucky to be able to offer that guidance in terms of working with organizations now to make sure we're all getting the money forgiven. Okay, great. So Deborah said we show temporarily restricted money separately from restricted money on our budget. I guess I would want to know what the difference between one or the other is. Maybe the restricted dollars are the dollars that you're going to be collecting this year, and the temporarily was from last year. So definitely if you want to take advantage of coaching, your coach will help you walk through that presentation style.
I think that's all I'm seeing in terms of questions for the time being. So Andrea, would you like to continue onward?
Sure. So just some more resources we want to make sure that everyone is well aware of. We also responded to the crisis pretty quickly. And so again, another resource that's on our website is, helping you to lead through this crisis and helping you to manage getting through it while we're all dealing with it. So there's a COVID-19 response, a spot on our website, and also a great wealth of information and tools. It's continually updated. You'll see when the most recent update is on it. Our team, they have spent many hours making sure that we are up to date with the latest and greatest of information, even to the point where the information might have been coming out at midnight on a Thursday night. They were making sure our website was up to date with information. So please utilize that resource. It's really, it's out there, it's free. And let's go to the next slide. There are also other resources that are out there that we want to make you aware of. The Council of Foundations, the Council of Nonprofits, they have been very keen in terms of making sure they're providing resources and information around the coronavirus, along with the Council on Foundations. So please check out what they have to offer in terms of resources and tools. And then we also are listing out some articles that we want to make sure that you're aware of that are out there. And these articles actually came out pre-pandemic, or they were being issued right around the time when it was all starting. So, but it's all information that's still relevant for today, depending on when it was issued. And so we just want to make you aware of there's. And when I look at these resources and the resources we're providing, these are also really good food for thought things to hand at the governance level. So the individual would say, could my board member be there with us? Very important. And there's some really great articles to say, this is why we're talking about this. And please, take a look at this article. It'll explain things in better detail as to why this is what we're focusing on. So again, some more articles that are out there. Strong Nonprofit has a wealth of information too. And that brings us to the conclusion of what we're talking about on the last website. I'm sorry, last PowerPoint slide. I wanted to say that Envy and I are around. It's not we're going away. And so even though we're ending our time today together, we are around anytime, along with anyone on the FMA team. We're here to support the sector and make sure that we are having access to the most amount of information, the most amount of tools, the most amount of resources, and being a voice in the community. And so please feel free to reach out to us at any point in time. And if I can't answer your question, because I know I'm definitely not the expert on everything, I will send you to one of our team members and they will give you the answer. I'll hand it back.
Great. Thank you all so much to Emily, to Andrea for sharing all that information. That was a lot to digest, but in a good way. And I think it was really helpful as nonprofits are thinking about how they can use the Alexandria Resilience Fund grants to help support their organization, especially right now in this October to December timeframe. So we will be sending out a copy of the slides, a link to the recording, an evaluation for this, as well as a link to the coaching. So that way you have access to all the different resources and you can take advantage of the different coaching that's being offered. Again, if you have any questions, don't hesitate to reach out to the ACT team. Again, also to FMA. They have generously offered their information there as well. And we look forward to working with you all. Thank you again for joining us and have a wonderful day.